Okay. Mona? Hi, Mona.
Hi, Miss Smith.
How are you?
I'm great. How you doing?
I'm good.
Give me a few minutes. I'll be home in about 5 minutes, but I'll stay on.
Okay. When you
I'll just
get
leave
home,
it.
because we I told them we'll start in 10. Yeah.
Okay, I'll just have it on mute.
Okay. All righty. Okay. So, Miss Augustine, you're saying something? Natasha?
Yes, ma'am. I was saying I got as far as the key milestones. I think that's for BOB.
Yeah, BOB has a lot. You'd be amazed at their history. Yeah. BOB started up to, well, I had up to 2013 when I did the book. Yeah. So I'd have to do another um, phase on BOB because we know they're trying now to really change from their situation where they were really in the red. So, and like we spoke before, that any government employee now has to open accounts at BOB. Yeah. So you had a chance to look at Central Bank and the other banks. Hello?
Yes, ma'am. I read over Central Bank as well.
Okay.
I think I made it past page 8. Yeah, page 8.
Okay. Anybody else? Most persons seem to not have read. This is my last opportunity. When y'all don't read, it's not, that means I'm gonna have a boring class because nobody read. So we can't really discuss anything because nobody really read. So we can't discuss as I wanted to do, really discuss each heading, but if nobody read, that means I'll be here just telling y'all what y'all didn't even had a chance to look at. So I'm going to pick on persons to read and see how boring that is. And when you're through reading, then I'll ask questions from among you all. Yeah. Who else is missing? Plenty of people in here. 1, 2, 3, 4, 5, 6. Ooh. Plenty persons. 1, 2, 3, 4, 5 persons not here. So we'll just try to give them a couple more minutes before we start. Everyone had a good break? We all have classes. Hello?
It was a good break.
Y'all don't have other classes, just this one?
I have one more on Thursdays.
Okay. All right. So you still get a break. Yeah. Yeah. Okay. Anyway, I guess when other persons come, we'll just let them sign in, log in. So I'm going to ask Ms. Strawn to read for me, please, History of the Bank of England.
Okay. History of the Bank of England. In 1964, the Bank of England was founded to lend money to the king for war against France. These types of loans were very risky.
Yeah.
The Bank of England had the right of being the only joint stock company which is owned by shareholders like companies today. The Bank of England was allowed to issue notes. All other banks in the United Kingdom had to be partnership or sole traders. Act of Parliament in 1709, the Bank of England monopoly was reinforced by an act of which Note that the other members of a banking partnership could only be 6. Banknotes were issued by a large number of small banks and the Bank of England during the 18th century. Further in the 19th century, most privately owned banks surrendered their rights to issue notes to the Bank of England, which is a special type of bank known as a central bank. Central banks are closely linked to government of the country where they are situated and may act as the special lender of last resort to the banking system in general and often secretly to distress and often secretly to distress banks.
Okay, right. Okay, now, as we know, the central bank would only, I've never seen a situation in the Bahamas where the central, or known of a situation where the central bank had to be the lender of last resort to banks who were in distress, because like banks could borrow for overnight. Like if they need the money, they can go to central bank. But I've never seen that happen since I've been in the banking system or heard of it happening. And as we know, the Bank of England, like they say, had the monopoly in the UK. And what is meant by having the monopoly?
Having majority,
Well, like,
being the
okay,
sole person to provide that product or service.
The
yes,
only person who is able to.
yeah. Yeah, just like before when we like for now, when we have BPL, they're the monopoly for they provide. We don't have another company other than Grand Bahama, which is totally different from New Providence. So we don't have somebody else. Just like before, it used to be just BTC. Now they have Alive. So it's totally, they don't have the full monopoly anymore. And just like before in banks, you had banks where some banks were the only banks which gave mortgages. They were really said mortgages, they gave mortgages. But as we know now, that monopoly is not there anymore. All banks seem to be giving the same services and products. We have insurance companies, we have small companies, we have Sunshine Insurance, our Homes. We have all of these who actually give loans. So it's no longer where it's only certain banks give a mortgage loan. Like Finco used to be the #1 leader in mortgage loans. And then we had First Home, but Finco was the #1 for mortgage loans. Now we have Commonwealth, we have BOB, we have Scotia. Everybody now is hitting, tapping into giving mortgage loans. And we know the competition is there, competitive rates are there, because like you'd always see where a Scotiabank or a First Caribbean have a promotion going on, switch your mortgage and you pay this rate, or you don't have to pay the legal fees or the government stamp tax. So they always have some competition going on with switch your mortgage from one bank and you don't have to do this and we'll take care of this. You'll get a credit card and yes. So like a Bank of England, which had the full monopoly, that does not hardly exist here in the banking system. Even in the offshore banks, it doesn't exist where one bank have a monopoly. And then you see where a lot of persons, a lot of banks and insurance company and different businesses, you see they merge. They merge because the market is so small. So companies merge with each other. So they have the full reign of everything. And then, like they said too, the banknotes, notes are issued by large number of small banks and the Bank of England during the 18th century. Pay attention to dates, because usually when I'm asking questions like the Act of Parliament was established in 1709, stuff like that, I would ask. And like I say here again, when banks was in distress, central bank would be the lender of last resort. You can continue for me, Ms. Vaughn.
Okay. In the 19th century, there were many debates on how the Bank of England's money supply, then banknotes, should be based. Eventually, it was decided that, with small exception, the country's banknotes should be backed by holding a stock of gold or silver to prevent too many notes being issued. In 1816, the UK went on to the gold standard, whereby all banknotes were exchangeable into gold. The UK remained on gold standard for a century until the outbreak of the First World War in 1914.
So as you see, the UK, they held back by gold or silver to prevent too much notes being issued in the 19th century. And as it said, in the 1816, the UK went on the gold standard, where all notes were exchangeable into gold. And it remained on the gold standard until the war in 1914. Okay, continue, Ms. Strong.
In 1844, the Act of Parliament called the Bank Charter was passed. It allowed the Bank of England to issue notes with restrictions once they were backed by holding gold or silver bullion, with no more than 20% backed by silver. The bank could only issue a limited number of notes which were not backed by gold or silver, which was called a fiduciary issue. The reason for it being called fiduciary is because it is based on faith rather than bullion. By 1939, all notes issued were fiduciary. All banks were prohibited from increasing their notes issues. If a bank merged into another bank, had to surrender its right to issue notes. This process lasted until 1921, where all private banks had to stop issuing notes, but some Scottish banks still issue their own notes.
Okay, with this, it's just saying that the banks were allowed, Bank of England issued notes without restriction. And if it was still backed by gold or silver, up to 20% silver, the bank could only issue a limited number of notes that were backed by gold or silver. And like I said, it was called fiduciary issued. And they said the reason for this was like, it was backed by faith. When they say faith, what does that mean?
Trust.
Yeah,
Okay.
that you gotta just, I guess, based on,
I guess
without
their
pulling any assets,
creditworthiness.
without
Creditworthiness.
pulling any assets.
Yeah, creditworthiness, like you know, well, hey, I always come to you and I do business with you, and not this type of business, but maybe some other type of business, and you've always lived up to your commitment. So I would take the chance on you. So it's just built on faith, trust, you know.
So, Ms. Smith,
Hey,
what how do you pronounce it? Fiduciary would be considered back in the day some form of deposit.
yes. And like I say, like now, you know, we have fiduciary here, some fiduciary accounts and stuff like that. Some offshore banks have that. Yeah, some offshore banks have that. But like they say, notes, but still the British, some Scottish banks still didn't even pay attention to them. They still was issuing their own notes
Reckless.
in 1921. So somewhere all private banks had stopped issuing the notes, but then at the end of the day, some Scottish banks, I guess, they were the rogue banks, and they said, oh, they ain't doing it. They still was issuing their notes. Miss Roberts.
You want me to read from the beginning of modern
Yes,
banking?
yes, ma'am.
Okay. The beginnings of modern banking in the United Kingdom. In the 19th century, banks were at the forefront of change, financing new ventures. This change started with the Industrial Revolution in Midlands and north of England, which saw a growth of small banks in those busy areas. The four key milestones which helped to set the banks on a path towards becoming the banks of today. These milestones helped to build and capitalize upon the increasing use of checks as a payment mechanism, where increasing check usage, reduced taxation on checks, the rise of the railways, and legal protection for banks. The last 30 years. This chapter brings banks in the important themes that have helped to shape UK banks in the new millennium. This chapter also tells of how regulation affecting banks and explains some of their success and failures. In 1971, the Bank of England published a document called Competition and Credit Control, which included uniform rules for all banks, thereby enabling all clearing banks and all other banks to compete under the same rules, or we would say the same playing field. The problem was that the rules had to fulfill two distinct functions: to control banks and prevent them from acting recklessly, and to implement the government's economic policy of keeping inflation and unemployment at a low level. In 1980, the Bank of England introduced two distinct set of rules, one for each purpose. When their new freedom to compete, the clearing banks and other lent heavily, especially to commercial property borrowers, in what was then the greatest post-war boom for most of the world. When the Organization of Petroleum Exporting Countries raised oil prices in 1973 to 4, the boom burst and interest rates soared. Some newer banks, which were not supervised by the Bank of England, had lent a great deal of money to those property companies and began to lose their deposits in the interbank market. The Bank of England organized a rescue operation by the clearing banks known as the lifeboat. The secondary banking crisis was one reason why Parliament passed the Banking Act in 1979, giving the Bank of England legal powers rather than persuasive powers to prevent banks from acting imprudently. In 1973, the UK had joined the European Economic Community, which required a comprehensive statute regulating banks. The banking community was divided into full-blown banks and licensed deposit takers. But in 1984, one of the full-blown banks, Johnson Matthey Bankers, collapsed, and the 1979 Act had to be replaced by another.
In a nutshell, Miss Bain, what do you take from this reading? What do you take from it? Can you tell me what are the key points you take from what the beginning of the modern bank in the UK and the last 30 years? You can scan through. I just want to know what your take on it, what happened, why certain acts and rules were implemented. Okay, it's saying that in the 19th century, banks were at the forefront of change. Everything was changing. So they started to use different mechanisms like increased check usage, like instead, I guess, just using cash or banknotes, or they started to use checks more. Then the reduction tax on checks. Tax was probably reduced on checks because of the high volume, it being used so much, so tax was reduced. The rise of the railways and legal protection for banks. They were four new milestones that helped to build and capitalize upon increase of check payment. Then in the last 30 years, the chapter, it says that banks in the new important team that helped to shape the UK banks in the new millennium. It talks about how banks was regulated. It talks about the competition, the competition and credit and control, the document which was published, which was called the Competition and Credit Control which include rules that all banks had, clearing banks had to follow. Just like here in the Bahamas, we have clearing banks now, like we talked about it in the last class when we talked about the ACH, how their cutoff times, and the ACH, the clearing banks have a clearing bank association. So most of the times, if you see a holiday, you say, bank closure or whatever, you'll see it in the newspaper. And the first thing you'll say, clearing banks, because all clearing banks, that's a committee. So they all come together and they agree on certain things. For example, I remember when I was on the clearing bank committee, there was a standard for checks. So all companies which had checks printed in a certain way, the checks had to be done over because each check had a symbol on the back. So you would know if you press that symbol that the check is not fraud. And so that's why a lot of times when people deposit for a check, you are able to detect it because of the Clearing Banks Association had different stipulations of how all banks checks had to be made up. Yeah. So most banks had to change and had to have it done over. I think executive printers, if not mistaken, were the ones who were doing everything for the clearing bank because, like I say, there were stipulations of how checks should be printed. Not like, enable it for you to be able to pick up if the check is fraud. In the 1971, the Bank of like I say, we talked about being the competition and credit and control. Then they talked about the problem was the rules had to fill two distinct functions to control the banks from preventing them to acting recklessly. Say, for instance, we here in the Bahamas, if the central bank didn't regulate banks, what do you think would happen? Anyone?
There wouldn't be any money to distribute.
Not only that, like now we talked about, last week we talked about the amount of loans being granted to people who are taking home a couple dollars. So what do you think would have happened if there wasn't a central bank to regulate the banks? Because that's what central bank is here in the Bahamas. They regulate the financial sector. So if the central bank wasn't here, we didn't have any rules and regulations, most people probably wouldn't have anything. And then the central bank also, right. And the central bank also deals with, you'll always see them put out something with non-performing loans. They always have that out there. And like I say, customers, the central bank is not just there for the lender, it's also there for the customer. And so if we didn't have a central bank, what would happen to the customer or what would happen to the lender? Especially in the legal arena, what would happen? Because like we know nowadays, we have a lot of foreclosures, and with foreclosures, we have legal protection. And I was listening to Mr. Bo talk today, well, Fidelity, they were talking about assets and liabilities and something he was talking about. I always thought that's how it should have worked, because he said something about when houses being sold. Like a lot of times people will tell you their house got sold, but they got nothing. And some institution will say, oh, you still owe us. But taking from what he was saying, I'm like, so if a house is valued for 100,000, I owe you 200,000, and you sell my house for, say, 350,000, you pay off everything. Whatever the residual left should be mine. But I don't think it happens that way for a lot of persons. I may be mistaken, but most people who I hear say their house was sold, they always say they got nothing, and the bank sometimes say to them, you owe us. Yeah, so the central bank, and like I say, the central bank is the law when it comes to the financial institutions. The central bank is the one who has the power. Central bank has the power, if they feel you're money laundering, if they feel you're doing this, they has the power to shut you down. Yeah, and that's why you see the central bank has the bank supervision department where they go out and do audits on all financial institutions. I think they do it every 2 years. Yeah, but they go out, they check your loans, they check your deposit. And like with all banks, I know in the Bahamas, there's monthly reports that have to be sent to the central bank. So they're looking at all of your wire transfers. They're looking at how you with even with your like I could say for banks, institution that do MoneyGram, Western Union, stuff like that. Central bank regulates them too. They also have to submit reports to central bank. So central bank really regulates financial institutions. When there is a new freedom to compete, the clearing banks and other lend heavily, especially to commercial borrowers. Well, we know right here in the Bahamas, we know the competition is there. So banks are there. They are competing, not just for commercial, but they're competing for personal loans and savings account, deposit account, because most banks don't offer you nothing on deposit accounts now. And even if you put up a fixed deposit, now I don't know what the rates look like. Mona, what are the rates now in the bank?
With the fixed deposits,
Uh-huh.
the interest rate at Fidelity starts at 1.25, and depending on the tenure and the amount, the interest rate can be negotiated.
Okay, but 1.25 is the minimum or the maximum?
The minimum, depending on the tenure and
Okay, and the amount
you can negotiate a rate.
Okay, who is someone is at Scotia. Who's at Scotia? I don't have the list in front of me. Who else is in the banking system? I don't have the list on me. Mortgage Corp. Miss Roberts.
Mortgage.
Hi.
Do y'all do fixed deposit and stuff like that?
No.
Well, we have a fixed interest rate, and because we can only finance 95% of the appraised value, we require 5% down.
Okay. All right. But requiring 5% down. So when you require 5% down, you would mortgage 95% of it. What about closing costs and all of that?
Well, that's okay. So we finance 95% of what the value is. So
Okay.
usually persons, they would purchase at a lower amount. And then once it can incorporate the closing cost fees, we can go over that 95%.
Do y'all do mortgage indemnity? I know
No,
before
we
they
don't.
used to do that. Okay.
No.
Okay, who is reading now? Miss Roberts? Who's reading?
I already read. You want me to continue?
Yes, please.
Okay.
I think
Trustee.
No, you already read that. That's fine.
Yes.
That's fine. Okay.
Okay.
Mona, can you pick up for me, please? Mona, did you have a chance to read?
Miss Smith, I was pulling my face. Hold on. I apologize. Yes, I did get a chance to read.
Okay, so we shouldn't have to read the trustee. You could give us some insight on what the trustee savings bank in the UK. Just a brief, because like I said to the class before, I hate reading in class. I just feel when everybody we come just to answer questions and go through, I just don't like the reading. Yeah. So Mona, can you just break it down in a nutshell, the trustee savings banks in the UK in 1810 to 1995?
No, I'll read the chapter.
Hmm?
I'll read the whole chapter. Okay.
Okay.
Set up, okay, trustee savings banks in the UK between 1810 to 1995. Set up a bank, open in between 1 p.m. to 2 p.m. once a week. Do not allow customers to deposit more than 20 euro a year. Fine them if they do not deposit regularly, which I think was wrong, because suppose they had to deposit every week.
But see, guess what? That's a Christmas club, remember now? When you open them Christmas club or them ASUS savings and you have to deposit. So that's the same thing we
Well,
do now.
no, we don't find people for not depositing every
You don't
month or
find
every
them, but you don't find them. But what happens if, okay, I open this Christmas savings, so I open this ASUS account, but I don't put money in it for, I put it twice and I put it no more, and I open it up for 6 months. What happens? What do you do?
what do we do? It doesn't grow.
Okay.
It
So
will just have that 2 month.
you won't make me close it or anything.
Well, that I cannot answer because I've seen incidents where persons open up a savings account and it has $100 on it until that 12-month period.
Okay.
And I don't know if deposits call them.
Okay.
Okay, so this may sound like an unlikely business model, but it was how many of the early savings banks operated. Unlike commercial banks, these were charitable organizations set up for the advantage of the laboring classes and the lower orders of society to encourage habits of industry, economy, and solidarity among the poor and the laboring population. It is generally accepted that the savings bank movement began in Scotland in May 1810, when Rev. Henry Duncan first opened the doors to his parish bank in Roodwell, Dumfriesshire.
Mhm.
He firmly believed that the poor should be encouraged to help themselves by savings for times of ill health, unemployment, and old age.
What do you think about that in the Bahamas? Do we do
I
that?
think
That sounds like
no, I
like a
compare that
credit
to
union.
NIE. Right.
But I mean, do you think banks encourage people to save?
I think I can only speak on Fidelity,
Mm-hmm.
but I think all banks encourage you to save. But it's
You
up to the
think,
individual to take the advice.
okay, you say all banks encourage you to save,
I
but
think they do.
okay, so what happens to banks where persons continue to go for a loan and every so often they're granting them the loan instead of actually saying to them, I know at Fidelity, most loans, like the personal loans, they have a built-in savings. And so with that built-in savings, persons don't always have to come to the bank to borrow because that built-in savings, say I save $100 every time my payment come out, 12 months, I have $1,200 plus interest if interest is being paid. So a lot of times I know persons, instead of coming back to the bank for a loan, they're able to go into that escrow savings and use that money. That's still the practice, Mona?
It is, but at the end of the day,
Mhm.
when I speak to the clients, when I book a loan, I will advise them not to touch the savings. And the reason being is because it assists with paying off your loan early than the maturity date. And I think you should if you want to touch it for emergency purposes. Don't touch it because, oh, my light off, or I need a car battery, which instances I've seen. So,
But okay, you're saying for them to not touch it if they need those trivial stuff. But what happens if they say, well, I need it? Okay, give me a loan. Which one would you think is better for them to do? Rewrite that loan or touch that savings?
If it's the amount that they need in the savings account, then I would give them half. Okay, if 5,000 is on the savings account, we cannot give them the whole 5,000. We'd have to give them half. So if that half is suffice for whatever emergency funds you need, then I would go ahead and give it to them. If not, if it's best to rewrite the loan, then I'll rewrite the loan.
But, and that's what I'm saying, you rewriting a loan, so that means they still have that money in the savings, but
Right.
they also get to pay all that administration fees all over again. Isn't that so?
No, because when you rewrite the loan,
You don't have to
then
pay
some of the
administration
fees,
fees?
some of the fees are discounted.
Okay. And when you say discount,
They don't have to.
what
I think
amount? What percentage?
Oh, I'm not sure because it's already calculated.
Okay.
But isn't,
But- Mhm.
is the credit union a bank, considered a bank?
Yes.
Yes, the credit unions
that's
give
not-
loans.
Right, and so that, I think the credit union have a more, I mean, and geared towards savings. When I say that, it's because, you can't, like, okay, like she's saying, you could go to the bank and say, okay, I want to borrow something. I guess from my, I want to get something from my savings.
Mhm.
The credit union do the same thing. When you pay a loan, you put money on your shares, and you can get, they have I think a more stricter rule to saving. You're not able to get off your shares if your loan is more than your shares.
Okay.
Oh, I didn't know that.
Okay.
Yeah, you're not able to get off that if your loan is more than your shares. So, and then as you pay off your loan, and you can always take your shares and say, at the end of the day, if I have enough, once it's more than your loan, you could pay off your loan.
Correct. The same thing with the escrow.
Okay.
If it's enough to pay off the balance of the loan, then you can go ahead and use it. But our Bahamian people, they feel as if the escrow is a regular savings account. I need to do this. Okay, I need $100 off it, which it don't make no sense because we charge you $28 to withdraw from it. So if you only have $300 there, you owe $150 from that. That's then $178 from the savings. But hey, at the end of the day, that's their money. You can only give them advice, and if they take it, they take it. If they don't, then they don't. Like when mine told me last week, Miss, I broke. I need some money. I said, okay.
And here again, like I say, this is why I think when COVID, the onset of COVID, and a lot of persons were laid off or lost their jobs, ask yourself how many persons could find a 6-month salary. It's not easy. They always say you should have a savings with at least 6 months. How many of us has that? Because as we know, the cost of living, every day you go to the shop, it's, and sometimes I wonder, and I wonder how persons make it who have a loan at so many different places. How do they make it? Because if you're going home with $200, how can you pay your rent? And if you have children, how do you do it?
I guess it's all on the kids who could help.
Yeah.
$200 is a lot. I tell you, some of them is carrying $43.87.
Who's carry 40? What get 43?
$43.87. I don't know
And then
how he did it. He was $110,000 in debt and don't even own a home. And his conversation was he need a mortgage in on Robinson Road. I was like, sir, you need a reality check. How?
See, that's what a lot of people don't understand. We get ourselves in the debt. Say we just continue to, oh girl, I could get this money. Girl, I need to go shopping. Oh, boy, I need to buy this car. And then we forget at the end of the day, there's going to come a time we want a mortgage. How can we get a mortgage if our consumer loan is so high? We can't qualify because you have people paying consumer loans like $1,000 and $1,300 in a consumer loan that they have nothing tangible to show, But then
And
they
then,
just keep rewriting.
and then some of them, their attitude is, I can die paying this bill, so why not get a loan? They just get loans just
Okay.
because.
Oh, okay, all righty, okay.
See, when
All
I
right,
die, the
Mona.
loans still could be here. Okay.
You can just continue for me, please.
There had been earlier attempts to encourage the working classes to save, such as Priscilla Wakefield's Female Benefit Club in Tottenham, set up in 1798. However, what set Duquesne's bank apart was that it was run along business lines. It wasn't reliant on donations from the charitable benefactors in order to survive. Reverend Henry Duquesne, founder of the savings bank movement, the root bell example was quickly followed elsewhere in Scotland. The idea soon spread south of the border into England and Wales. And by 1817, over 80 savings banks had been set up. In
Do you think
Scotland,
do you think they offered interest on those savings? They never said. They had an interest on them set up
probably.
on those savings. Oh, yes, see right here. Bank could, it says the Scotland Savings Bank could earn interest on their funds by depositing them with joint stocks.
So when they say with joint stocks and chartered banks, what does that mean? Meaning if I have
Joint-
collateral?
Right. Like say you have stocks, like now, like, if we look at BISX, all we have now, before we never had a lot of companies, like local companies trading on BISX, but now you'd have like a Fidelity, a Finco, J.S. Johnson, BOB, so many companies trading on BISX now. Like before you could account them, you have Kalina, it's so many now trading on BISX that stocks, you'd find that when you go to, say you have an account at RF, Royal Fidelity, you go, you say, okay, I need to purchase some stocks. I want to sell some stocks of my portfolio. Or, persons now, if you look at BISX, you see where Fidelity shares is trading at 1491. I saw it today. If you look at a BOB, I remember when BOB shares was down. When I looked at it today, it said 249. I was like, whoa, it's going back up because it was $1 something, And so, yes, that's trading. I guess they won't call it trading, but stocks and chartered banks. Yeah.
Okay. This, however, was not the case in England and Wales. Wales? Am I pronouncing it right?
Yeah.
Wales. Okay. England and Wales. The situation was resolved in 1817 when Rose Act was passed. This act allowed the funds of English and Welsh savings banks to be deposited with the government in an account at the Bank of England. The account was administered by the commissioners for the reduction of the national debt. In return, the banks received an attractive rate of interest, part of which was passed on to the depositors. The act had an immediate impact. By 1818, over 465 savings banks had opened across the UK.
And how much was open before in 1817?
80.
And in 1818?
465.
Right. So same thing with, okay, government. I don't know, sometimes you look at the newspaper, you'd see government selling government bonds. You can invest in government bonds. And you see them having government bonds for, say, 10 years, 5 years, 6 years, 3 years. And the rates are really competitive. Have any of you ever invested in government bonds?
The central bank?
Yeah, government bonds, yeah.
Yeah, yes.
Yeah, because sometimes they'd have treasury bills also. But government put these bonds to market, just like they say here, to help with the debt. So government bonds are there. And I'd advise persons, yes, if you have cash that you don't need to, actually spend right away, government bonds are good to invest in. It is, because you look at the return, the rate of return. I know the last time I know they had one from January, I think, to December. It was just 1 year, and it was a fixed interest rate. So it didn't go up or go down. It was fixed at 3.10%. And I think it's still, I think Friday.
For who? For which institute?
Government, central bank.
Oh,
They had
because
the
I know they had
bonds.
some. They had some for the Nassau Port, IHOP, Red Lobster.
Oh yeah, IHOP. Yeah, I know a lot. What Red Lobster? We getting Red Lobster too?
Yeah.
Oh gee.
So if you wanted to buy shares, you could have.
Okay. Yeah, no, it's
But
not
I
the
don't know if it's
government
closed.
bonds. Pardon me?
I don't know if they closed it already.
Oh, IHOP. Red Lobster. Lord, the poor people ain't gonna have no money now. They be gone to Red Lobster. Well, at least I'll have them to stay in, not go away on the plane, and keep some of the money right here. All right, Mona, continue. Sorry, go ahead.
I have to continue. I thought I finished.
Trustee and customer.
Just a question before we move on. Would you advise someone to borrow to invest to buy stocks?
When you say to borrow to buy stocks, no, I wouldn't. Because like I say, and a lot of times you have to remember, people invest in bonds and stocks. Well, bonds are good because like especially if it's government bonds, you don't get to worry too much. But if you invest, stocks go up and down. Like anything, just like one day Fidelity shares, when Fidelity first started off, their shares was what, $2 and something? $2.37. And now it's just from 2008, it's just been, going up, it go down, it go back up. Yeah, so persons who invested in Fidelity earlier, they made a killing. I think it was Bahamas, First Home then. They made a killing because guess what? If they kept those shares and didn't sell them, they did well because $2.37 to $14.91. Yeah. So at one point it was at $14.99. So they would have made a killing. But I would not borrow money to buy shares or stocks. But people do. And if you could afford to do it, like I say, people do it, like the persons who really have cash like that, even though they have the cash, like we talked about last class, they would put their money on fix and they purchase the shares or the stocks or the bonds, but they'll still have their cash and they purchase the shares. Like that, I wouldn't mind to do it. But to actually go in the bank and having to pay a big interest on that cash you borrow, because what are consumer loans? What is the rate now?
You want the honest rate or you want the rate that seems to be negotiable?
The honest rate.
On the honest rate.
15%. 15%.
And
but if you have
negotiate
collateral, you can. If you have collateral, then it'd be between 10 to 16%.
16.
Depending on the risk. Yes.
What about Miss Strawn? What about credit union?
Oh no, I don't know. I have a Bahamas mortgage. I really can't tell you.
Okay, right. Who in the credit union? Somebody. I thought someone was in the credit union. Yeah, well, like I say, I'm not gonna, unless I have the liquid cash, I'm not gonna do that. I won't go bench to get 18% or 16, 15% loan to purchase that unless I have liquid cash that I can use. Huh?
Someone did it. That's why I was asking. And they was like, no, my manager is like, she doesn't advise anyone to do it. So I just wanted to know what was your thoughts on it.
I wouldn't. And like I say, I know there was a time when Fidelity, when I worked there, they was giving loans for the port, not the port. It was Commonwealth Brewery, somebody who was selling, and persons who invested in it did well because the shares are really high now. I can't remember what it was, what it's our for, but
Mm-hmm.
they doing well with it. Person, the bank had given staff, you know, the option of getting a loan, staff rates wasn't that high. So yeah, some persons did and they're doing well. Yeah,
Okay.
persons who did the investment.
Okay.
All righty. Mr. Ferguson. Hello, Ferguson. I see him on. Okay. What about Mr. Pickstock?
Good night.
Good night. How are you?
I'm great. You're well?
Okay. Did you have a chance to get your book and read? Because most
Yes,
persons
ma'am.
didn't. Oh, you
Yes, ma'am.
did? So,
I have my book from like last week, but I did some
okay.
reading on the book. Yes, ma'am.
So can you give us some insight on trustee and customer?
Well,
Mhm.
um, as I was reviewing the book, basically the whole book was enlightening me because I didn't really know about all these stuff that took place, and a lot of business were opened. It was really shocking and eye-opening.
Mhm.
But I'm gonna start along with reading. Not gonna take too long. Although the early
Okay.
banks were run along business lines, they still relied heavily on the support of their trustees. These trustees who give their time voluntarily oversaw the running of the bank. They were upstanding members of the local community who often came from the ranks of
Oh,
aristocracy, if I'm
aristocrat.
pronouncing the word right,
Aristocrat.
aristo- aristocrat, landed gentry, and clergy.
Okay. Do
With
you think?
this, go ahead.
Okay. No, you go ahead. Go ahead.
With
I was
this,
going to ask a
right? When I
question, so that's why I say you go ahead. Mhm.
Okay, so with this, my first thought was these people really given their time voluntarily. That's like my first thought. And what do they mean by banks or run along business lines? Could you give me an insight on that? That's why I was confused at.
Although early banks were run along business lines, well, I guess them saying run along business lines, I guess the same way we'd run a business, a bank would run, it was being run the same way, but it was
Okay.
being supported by persons who volunteer, not because they volunteer, they didn't take it seriously, that they did their due diligence in running the bank. And that's my take from it, that even though they were doing it voluntarily, they still ensured that they were complying. Do you think that could happen here?
Well, in our day and age, I don't think most people would be able to say offer their time voluntarily. No, I don't think that would happen,
You don't
especially
think
this
so?
young
Some of these
generation.
rich,
I don't.
no, but I mean some of the older persons who have plenty dollars, the rich people.
Not the old people who retired and stuff like that. Yeah, because they ain't got nothing to do. They at home and they working. They'll definitely go do it. But for to say like for people like me, I ain't going to
Uh-huh.
go sit down no bank, get myself stressed out, and ain't getting nothing at the end of the day.
No can get no pay.
No.
Agreed. Mhm.
One of the other words that accuracy word, you could break that down for me? Like, could you tell me what it
Aristocrats.
means?
What is aristocrats? These influential people, aristocrats,
Okay.
very influential.
Oh, it's spelled wrong in the book. Oh, that's why.
Mhm. Uh-huh.
The consumer base of saving banks was also very different to that of their commercial counterparts. The banks were aimed at what were termed the industrious poor. Many of the depositors were uh, artisans,
Uh-huh.
laborers, small farmers, and servants. They also attracted large numbers of women and children, unlike the high street banks. Now, I was shocking. This would actually shock me because honestly, I wouldn't think that these people would actually go in and say, you know, I want to save events. You know, so most of these
Yeah,
people will be like, I keep this under my mattress. We got a little tin
yeah,
foil inside of the wall with a cupboard. So
yeah,
I didn't really know that people were really interested in those because I when I think of it back then, I just think of just a place open where only rich people could go in and and see it.
yeah,
But this really
yeah,
reading the
yeah,
history and looking at things, and especially reading back at the Bahamas, I was blown. And
yeah.
when I saw when I read it, and I was like, okay, they were doing some things back then. I like what I
Yeah.
saw.
Yeah.
So
They
that's
were,
my thing with the history.
they were really, Bank of the Bahamas was really, really doing some stuff back then. Yeah, but like I say, compare what you just read to us. How do you see that here? Do you see us persons in this level? Do you see them following the same pattern?
No.
Yeah, no, not during. Well, let's say the minority in this will probably be like the people who already has funds or people who was trying to like my uncles. My uncle's always trying to get money. So my uncle said I'm gonna go over to stay putting fixed deposit, stay doing that. So I believe the older folks would actually do this, but the younger generation, like I heard one today to work in the treasury, work I had somebody spend $300 on weave. I couldn't all my heart, my chest, my kidney, everything rearranged.
Joel, stop talking
I
about
that could have
business.
you could have and
Stop
then
talking about
$150
business.
$150 put it on. Everything rearranged inside of me because I could take it. But just
Yeah,
saying that you're gonna take that and invest that and open up a savings and use that
yeah.
to really benefit you. I mean, now you know the weave look good now. Just the money you put to save that, you could have
You
keep
want
that child.
Mona tell him my shop.
As I tell you, stop
Tell
talking
him.
about business.
But
You.
but I would actually, if I was in Mona's or anybody in particular in the branches, I would actually encourage consumers that come for loan or come to open an account. I would say open their savings, open something up that could help you benefit you instead of coming to rewrite, borrow. Because they might say, "Oh, I finished a loan. I just finished my loan. I go right back to the bank 3 months later, go
And
borrow
they
next
do.
loan." You know,
Correct. And that's why I encourage them to join the escrow savings plan because you know what it is to finish pay off a loan after 12 years. And then the emergency come up 3 months later, you need money. I gotta borrow
Whoa.
again. So you know what it is to pay off a loan? Probably $70,000 and you getting a check back at the maturity date of probably 12 to 15,000. It
Yeah.
feels good.
Yeah.
But
It
but
does.
my thing is though, I ain't gonna lie, when I ain't gonna lie, you should have been my loan officer when I was looking for money back to the Bahamas, because I would have loved that savings at the end of the maturity date.
I
But
don't think they have
I
that.
Bank of the Bahamas
Most
don't.
banks don't. Yeah, most
Only
banks don't.
Fidelity.
Yeah. Yeah.
I think
But
Scotia
I would
has it against their mortgages. If I'm correct.
But it probably would only be for their to incorporate for their real property tax, house insurance, stuff like that.
Okay.
Yeah. Because most
but
banks do it for real property tax, house insurance, life insurance. So they have an an account set up where monies go in there, just like Fidelity goes in there for. So when it's the time for your insurance or your real property tax, it'll automatically come out and go and pay the insurance, house insurance.
How should
Okay.
discontinue that?
They did.
Scotia discontinue?
Yeah,
So
Which
what
which y'all
happens now?
paying? Which y'all paying on fixed deposit at Scotia zero?
I think so.
It isn't 0.033 no more.
Mona leave
Scotia
it
was
as it is.
Scotia was always in the liquid, so
Them and RBC.
they I remember when I used to work at Finco and I was manager of financial planning and I wanted to place money for the bank, I would call Scotia and I would say, do y'all need any money? What rate y'all will give me? They say, no, we don't need no. It was always Scotia. They never needed no money. So Scotia never needed no money. Royal Bank never needed no money. So I would always go to a First Caribbean or a bank in the Bahamas and see what rate they would give me. And I was always able to place the money with First Caribbean, which was CIBC then, and BOB, you know, because Scotia never needed. They were always liquid. So you call them, but they be telling you this is all we could give you because we don't need your money. Yeah.
True.
They didn't. They were always liquid.
But our escrow savings pay 5%.
Yeah.
They had 100,000 customers from when they were.
Uh-huh.
Hello?
Hello. Mr. Pickstock. Mr. Pickstock, you still on? Okay. I didn't see Mr. Ferguson. He's not saying anything.
He sent an apology. He said his microphone is malfunctioning. He sent a message in the
Okay.
chat.
Okay. All right. Let me see. All right. So who's going to take over from Mr. Pickstock? Hello? Volunteers?
Audrey,
Who's that? Oh, okay. That's obviously.
we're starting at crisis, correct?
Yes, ma'am.
Okay. Expansion of the trustee savings bank movement ground to a halt in the second half of the 19th century. In 1861, the Post Office Savings Bank Act was passed. Within a year, more than 2,500 post office savings banks had been established. Many of these were in direct competition with existing STBs. Within 10 years, more than 200 of these had been forced to close. A few years later, in 1886, the movement was rocked once again, this time by a major fraud. The actuary at Cardiff Savings Bank was found to have embezzled 30,000 euros. This amounted to a massive 15% of total deposits. The bank's trustees handled the investigation poorly and enraged depositors by refusing to repay the money in full. The crisis escalated, with the whole savings bank movement coming under intense scrutiny. Following the Cardiff fraud, it became clear that a greater degree of cooperation among the banks was needed. Until now, individual saving banks had been run independently of one another, each one being very much a local concern. The first step towards unity was taken in 1887 with the establishment of the Trustee Savings Bank Association. The association had two aims: to protect the interests of depositors and to increase cooperation among savings banks. The savings bank movement continued to expand during the First World War. This was largely due to the government's attempts to persuade people to save more to support the war effort. During both World Wars, saving banks acted as agents for the sale of government stocks. War savings certificates and defense bonds also proved popular with depositors. In 1947, a savings bank mutual assistance scheme was established. This allowed the richest saving banks to support projects, to set up new banks and lend money to other banks who wanted to expand. 59 new offices were opened as a result. Over the next 35 years, saving banks continued to expand their branch network and merge with each other. As a result of this consolidation, by the beginning of the 1970s, their numbers had reduced to 72.
And we know it reduced because of mergers. Yeah, but like we know too here, we have a lot of fraud cases, forgery that happens, which a lot of times don't come to the forefront because we have like persons with families would pay the money back, and so things don't come to the forefront to know that. But we have a lot of fraud cases, a lot of forgery, white collar crimes that happen. Because I remember a situation that was quite public, remember, with the former MP he's dead now, Mr. Hanna, Arthur Hanna, remember, his daughter. And a lot of times forgery happens when we don't frequent the bank. We have customer, staff members who know, well, hey, oh, this person account dormant. They don't come. People do a lot of fraud from dormant. You also have, I remember working at a bank, and there was twins, two twin brothers, and the twin brother who was on the account with his mother, he was in college. The other one, he was here and he was on drugs. But because persons who went to school with both of them mistook the one who was on drugs for the one who was in college. And what happened, I guess he got wind of the account. He came into the bank and his hand was broken. So they all said, he said, oh, his signature didn't match, but everybody was blaming it on, oh, because his hand was broken, but it was the wrong brother. And at the end of the day, he took 60 grand off that account.
His hand was broken for real?
Yes, but that wasn't the right brother.
I don't think that hand was broken for real.
Yes, but he wasn't the right brother. He wasn't the right brother. He was the brother who was here on drugs, and the brother who was off to school was on the account. Man, when that woman come to her account and saw that money, the bank had to pay every cent back on that woman account. And guess what? When he came into the bank, persons would say, he would hail them, because he went to school with them and they just couldn't distinguish between the two. And he would hail them and they would be like, yeah, John, how are you? And he know his name is Peter. But he'd be like, yeah. And guess what? All those persons who sign and say, oh yeah, I know him, all of them got warning letters because he was the wrong person. And so that's why I always say, a lot of times people may come in the bank when I used to work, they'd be like, I know, you don't know me because I don't know where you live in. I don't know you. We might have been to school together, but I don't know you. I signed it. I know you. So you have to be
if I don't know where you rest your head, I'm not identifying you.
Thank you. I don't know you. We went to school together, but that's it. I don't know nothing but you. What are you talking about? You know me. You don't know me.
Call Mona. We graduate together.
And Mona have to say, not me. I don't know you. Do I know where you work? I know where you live. No, I don't know you.
Furthermore, I ain't coming out like busy.
But yeah, but a lot of times that's what happens. And so, like you see, fraud has been around from that time. So, it ain't nothing new. It's something that's been around from that time. And like I say, we have a lot of, okay, like people now here with this Bitcoin or something, the Prime Minister was talking about investment or something. I just hear a piece of it. Any of you heard of it? Hello.
I heard something about it. I heard something about
the scheme, the Prime Minister is talking.
Right. I heard something about it.
I was supposed to read it more.
Right. It is some company, it's some currency, something.
Yeah.
I didn't know it. I heard about it.
Yeah, I said I needed to read some more on it. And then too, like,
it appears as though the people back in the 18th and 19th century, they were eager to save.
Yeah.
And they were also business minded. Everybody want to open up a bank and they wanted to save and
And then you see at the end of the day, they realized that hey, it's only a certain amount of people, so they did a lot of mergers. And when they merged, it reduced the number of banks because
they took every opportunity with every new thing that came. Once they had like the post office savings that came on, and they just grabbed that opportunity, and everybody was just trying, but they was eager to save though.
Anybody ever had a post office account here? Because we know the post
No.
office, I mean, when I say, Jesus, what kind of records they keep in the post office? What kind of accounting they do? Because if somebody could have fraud away with $600 and something thousand from the post office account, I don't ever know whatever happened with that case. Just remember, what the man name? Mr. King was charged with forgery, fraud and some 600 and something thousand from the post office account.
I think he was charged, he might have been charged with 600,000, but it was more than that. I don't think back in the day they used to keep a record. And those
You
old
know
people
they
used to
get
keep
no
them
record.
accounts. No, they have no
And
record.
thank you.
It had
And
to be
not
more
only
than
that,
that.
even on the family islands, what kind of records they keep there with the post office savings? What kind of record? So I don't even think they have no audit done on those accounts. So people, all kind of money could go missing and they don't know. And you know, some person's probably even dead and their family didn't even know they have a post office account,
Right.
you know? So things
But
like that happen.
the thing is I don't even I wouldn't in my country, in the Bahamas, I wouldn't even consider opening a post office here. That would not cross my mind. Because I go into the
Why?
post office. I've been to the post office just to register to vote. And I have
Uh-huh.
seen I just by looking at it, this is on the post office in the Bahamas is not in. Everybody yawning, everybody just sitting down doing nothing, everybody just
No
sitting.
man, you
So
rented a new
Yeah, but-
post office now, the one with Brett Simmons that them have in the morning.
Yeah, but
Yeah,
then
there's a
the
post office.
people in those far out islands, that's all they have to rely on to get money.
That's it. It's supposed to. And now too, you know, our Scotia Bank, Bank of the Bahamas, Royal, all these banks just leaving the family island. They ain't have
Okay.
nothing. Only
There's
thing they have is an island luck to go get money or put their money on or get money. People sending their money because Scotia gone. Scotia only got their ATM machine in some of the islands. So,
They allowed to use the post office to send funds.
Yeah, I didn't even know they still do money orders.
How does
Yes,
that
they
work?
still do
But
that.
we have a
yeah, but
few money orders come in.
come on.
We have
You
a few
don't,
money
you
orders
don't?
come in from the family islands, like a couple
What,
times a month.
what does that look
Yeah.
like? Like, what do you do?
It's like
Okay, so
The receipt.
listen, it's like a yellow paper, like a receipt, and the general assistant has to come bring it to us. We have to stamp it. He have to carry it back. And if it's a certain amount of money, they tell our general assistant that they have to pay us in check. It's like
It's too much.
they just yeah, it's a lot.
And it takes long sometimes.
It does. It could
That's
take
why
up to 2
island are
weeks.
taking over.
Yep. And whether we believe it or not, at the end of the day, that's where everybody go in. Because even like when you go, and whether we believe it or not, as much as people may say about them, trust me, if you ain't get your compliance thing in order, y'all gonna get blocked. You can't do nothing. I know a couple of people, they
Well,
say island lock, y'all can't get blocked.
I use them for when I ship in swimsuits to the family island. The
No,
people
I
is
mean,
supposed to money there.
Yeah,
No,
they
I
notice
mean,
you
if
ain't
you
using
don't
their
have,
services.
if
And
you don't
just
have your
to get your money.
compliance document, like you, just like how it is the bank is tell you if you don't verify, and then if they see you ain't depositing so much, y'all can't get blocked. You nobody
Well,
can
that's why I'm
deposit
get
on
blocked
that.
then.
Yeah, they
That's why
know
I'm get
you
blocked
only
then.
using it for transactions like business transactions and not
They
like
see you
spinning or
spinning, or
nothing.
they see you.
That getting close.
Well,
But
so on then.
as a child of the Lord, you know, I ain't supposed to be gambling, but I have an account and I ain't got no account there. But I just have, let's say I just have an account there just for, you know, like, Jesus, buddy, why can't I have to go spin numbers
No,
and
No, you
because
I
have
go to the
that
counter
is
and
what
say
they
I need
Remember,
come for.
565 on
But-
Walk Street.
So
But
y'all
then
Remember,
trying
the
to
central
say,
bank, they can be
So you-
fined for that.
so y'all
Yeah.
trying to say if my account at Analog isn't active for a certain amount of time, they take their account back?
No, if
They
it
could
isn't
block
active
it.
for gambling purposes.
Right.
Because
Oh,
at the end of the day, if central bank, not central, who regulates them, the gaming board, if the gaming board come
Yeah.
down on them, they will be fined. So
Yeah.
you getting $50 sent from the island, that fine can be way more than that.
Oh, that's true. Yeah.
So,
Yeah, so the bottom line about
So
it is for gaming.
mm,
I understand because my brother goes and deposits this money on an idle account, and the person has retrieved the funds off the account. So why
But
is
then
it
they might,
that?
hold on, they might have spent a little bit, they might have just get the money, they might have paid little numbers, so if they see you playing little numbers, you good. But now if
But
they
I
see only thing you having is transaction getting deposit.
but I think
No.
it's a certain amount that can
Yeah, they,
deposit it on the account.
yeah,
yeah,
yeah.
and after
Because
that you can't deposit because you could go there and they'll say, no, you can't deposit
no,
that.
and then you could only take off 100 too. Because I had a
Yeah.
person in Maguana, I think, where I used to send wholesale to her, and if she deposited $200, I could only take off $100.
Oh, okay. All
But then
right.
again, it's who you know, because you can still tip them a little $10 and get
Agreed.
300 off.
Agreed. Yep. Like with anything, that's how it is. Wherever you go, you come to custom. I see people come to custom for me. I so honest because I ain't want custom take nothing belonging to me. So I can always put everything down on the paper. I see somebody, she
Oh,
said she
no.
had 5 suitcases and she spent $300. I was like, what? Yeah. Yeah. So like with anything, people find loophole, and then some people just go straight through. Girl, I had all of that and I paid nothing. Yeah. So, but anything, there's loopholes.
Yeah.
Mr. Pickstock, you back?
Yes, mom, sorry, but my Wi-Fi is really freaking out this time. But I'm back.
Okay, you could continue for me because Natasha, I think she started with crisis. Yeah, she's finished with that.
She's finished the crisis. Okay. Former unity is where we're taking off.
Yeah. Mhm.
Okay. In 1971, the government set up a Page Committee. Its remit was to review the workings of the savings bank. The TSB Act of 1976 was passed. Based on recommendations contained in the Page report, the act allowed the savings banks to offer the same rate of services as their commercial rivals for the first time. So within this first line, I'm gonna just ask a question.
Mhm. Mhm.
A Page Committee. What is really a Page Committee?
I don't know, what is the page committee? A page committee was set up. I guess like a committee that regulates, I guess, probably regulate that unit. I'm
Okay.
not sure. In 1974, the government set up a page committee. Its remit was to review work of a savings bank. I guess it's a committee that regulates the bank other than the central bank or the Bank of England. Another, just like in banks, you have different committees. Like you have persons who do audit. You have an audit committee in a bank because
Okay.
the audit department has has a committee that has to say, okay, this charter should be done or this review should be done. And when they do reviews, it has to go to the audit committee for the audit committee to give approval. Like when they go out and do the audit committee, once the report is sent into the audit committee, they have to give an approval to say, okay, it's fine, or they will come back and say, I think you needed to review this area or review that area. So I'm thinking it's like a committee set up in government. Government set up a committee that, like the Auditor General, who goes up there and review all the government accounts.
Okay.
And that's what I'm thinking it is.
Makes sense. Makes sense. Continuing on, the Act also created an entirely new regional structure. The 73 savings banks merged into 20, later 16 regional institutions. These institutions were overseen by the newly created TSB Central Board. The board took over regulatory and supervisory powers previously exercised by the National Debt Commissioners and Inspection Committee. So my question is,
Mhm.
all I have been reading was I have seen so far was these saving banks and banks opening up vastly. Why
And
did
then they
they
merge in.
why did they really open a lot of these and then just some of them failed? I saw, but then
I guess,
why
I
in your
guess
opinion
too,
why
I
did they
guess
open?
too, I guess too, like with anything. Okay, take for instance right here. we'd have somebody who say, okay, I can make this business work. I'm looking at what you're making. I don't know the whole gist of the system, but I'm saying, oh, I can make something from this. Just like the import export. We have persons, I see a company, they probably opened last year, September. And then I looked today, I said, gee, they're not there any longer. See, people think that a lot of times it's easy to run a business. We don't go out there and do our due diligence with saying, looking at what the portfolio looks like. We just go and we say, oh, I can open this business, just like a dress shop. People say, oh man, people always want to buy clothes. People always want to do this. And like you see, you saw where the poor and the farmers and all them were saving. So people feel that, okay, I have all these workers working for me, probably they'll come and invest, save their money at this bank. So people just felt running a bank was easy, but then they realized that the competition was there. So with the competition, they just couldn't compete. So at the end of the day, just like a big bank or a big insurance company would say, okay, like years ago, insurance company merged. Like I know they had Crown Life and Crown Life, Kalina bought out Crown Life, so stuff like that. So because Crown Life wasn't making it as much and Kalina was doing well, Kalina was able to buy Crown Life, and it was a merger. Just like with First Caribbean, remember it was a Barclays bank, and First Caribbean bought out Barclays. So it's just like when a bank isn't doing, or any company isn't doing as well as they thought they would do, and somebody approached them and say, okay, I think we could merge, and that's what happens. And I think that's what happened because the market wasn't there for so many savings banks, and so that's why they merged. The 73 merged into 20 and later into 16. So the I guess the need for it wasn't as great as the banks thought it would be. So that's why they had to do a lot of mergers.
Okay. Want me to continue on with floating and beyond all?
Please, yeah,
Okay.
after that.
Taking advantage of their new freedoms, TSBs expanded their facilities and services. Further reorganization was needed to keep pace with this growth. In 1983, the remaining 16 savings banks merged into yet another larger regional groupings. TSB England and Wales, TSB Scotland, TSB Northern Ireland, and TSB Channel Islands. 2 years later, another TSB Act permitted the group to restructure in preparation for its flotation on the London Stock Exchange. This took place in 1986, and TSB Group plc was created. However, developments did not stop there. A year later, a network of estate agencies was set up, and Hill Samuel Bank and Target Life were acquired. 1955 marked another milestone in the group's history when it merged with Lloyd's Bank to form Lloyd's TSB Group. It produced what was at the time one of the largest forces in the UK domestic banking. With
And so,
this, it really showed. Sorry about that. It really showed the growth of the company.
yeah.
It's really was a lot of banks, and I really admired the initiative that all of them took to jumpstart a business, and it really should be used to motivate young people now to jumpstart businesses. And so just to see that they grown so ravishly is what is amazing. And I think that banks here should, well, not merge, but take the same values that were back then, because a lot of values that they have in these books, this book now in history, most of them do not have these access and things now that people could really go ahead and use. But I believe that with these things, we could just, even if who are in banks now could go ahead and advise it or say something to just alert customers to be more saving, gather more business and stuff like that.
Yeah. And that's why I say that's why you'll see insurance companies no longer just write insurance. They give mortgage loans, they give property loans, they have investments. So, insurance companies has also merged out there where they venture out there where they give more than just life insurance or health insurance. They now do investment. Yeah. Thank you. Anybody else want to comment on what Mr. Pickstock said? Add? Okay, who have not read? Volunteers. Bain. Miss Bain, you read?
Sorry?
Yes.
What did you say? I didn't hear you.
I said, did you read already?
No, I
Yes.
haven't.
Can you please? Lloyd's TSB Bank, PLC.
Okay. So, Lloyd TSB Bank PLC is a retail bank in the United Kingdom. It was established in 1995 by the mergers of Lloyd's Bank, established in Birmingham, England in 1765, and traditionally considered one of the big four foreign banks. With the TSB Group, which traces its origins to 1810, Lloyds Bank has an extensive network of branches and ATMs across England and Wales, and offers 24-hour telephone and online banking services. Today, it has 16 million personal customers and small business accounts. In Scotland, the bank operates as the Lloyds TSB Scotland PLC. Amongst a number of services, Lloyds TSB holds 5 basic banking services like personal banking, business banking, private banking, commercial banking, and international banking. Like many other banks, this bank also holds a wide range of advantages in personal banking.
Okay. Would you have think ATM was around during this time?
Not at all.
Never thought ATM was
So,
wrong.
me neither, but ATMs has been around. I guess we in the Bahamas just got a knack of it later, but ATMs has been around, and I say an online banking too, online banking services, telephone. Anybody know about telephone banking?
I heard of it before. Never experienced it.
But I was shocked.
Finco used to have telephone banking, like how
Yeah,
you
that's
have
where I heard of
online
it.
bank, but like how you have online banking and you go online and do it, you would call. You just call and get your balance, do your transfers. Yeah, that's how it was.
Now I know First Caribbean does it because at the branches you do not, if let's say you know First Caribbean customer, you
Mhm.
do not, you have to activate your card over the phone. So you don't have to
Right.
do
Yeah,
anything
yeah.
in
Right, but I'm
Go ahead.
saying when I say online telephone banking, I get a call and pay my bills. I could call and do a transfer from one of my savings to the next. That's how the telephone banking was at Finco years ago when I first started there. They had telephone banking. Yeah.
So
Instead
how
of,
would you verify that that's the actual individual who on the other end? How
but
would you
you
verify
had to
that that's
have
the account holder?
you had to have a pin. Jessica, you have a pin.
Oh,
How you had to have a pin. It wasn't just like that. No, you had to have a pin. So everything
okay.
was on the up and up. It was secured because you had to have a pin to be able to
And I
do
give you the pin over
transfers
the
or
phone.
it isn't like me talking to you, it's
Oh,
like animated, like how automated, like how when you call BPL to pay a bill, like that. It'll come on like that and say enter your card number, enter your security pin, stuff like that. So
gotcha.
that's what it did. Yeah.
Okay.
Okay. All right, Miss Bain, you can continue for me.
Okay, the Royal Bank of Scotland. The Royal Bank of Scotland itself was founded in Edinburgh by Royal Charter on On the 31st of May, 1926, it opened its first branch in Glasgow in 1783 and developed a large network of offices throughout Scotland during the 19th century. In 1874, it opened a branch office in London, and from the 1920s, it developed by accusation and a major presence in England. Sorry if y'all hearing planes. I live extremely close to the airport. I don't know if y'all can hear it, but it's right. During during the 1980s, the group diversified, setting up its innovative car insurance company, Direct Line. It became the first UK insurance firm to use the telephone as its main channel of communication. When it started out, it employed 63 people. Wow. There are now more than 10,000 employees based in call centers in Birmingham, Bristol, Glasgow, Leeds, and Manchester. Banking.
You're going in and out.
You hear me now?
Yeah.
Okay, so you need me again?
No, continue.
Okay. It launched direct banking in 1994, which quickly became Britain's fastest growing 24-hour telephone bank operation. In 1997, it announced the UK's first fully fledged online banking service, as well as joint financial services venture with both Tesco and Virgin Direct. In March 2000, the Royal Bank acquired National Westminster Bank plc, biggest takeover in the history of British. The move served to create a huge group with a highly diversified portfolio of services for personal, business, and corporate customers. After the merger of the Royal Bank and NatWest, the businesses of the two groups were combined, and the enormous task of integrating their IT system began. NatWest's retail bank continues to operate as a distinct and separate brand on the high street. April 2008, under the controversial chief executive Sir Fred Godwin, the bank was forced to raise an extra 12,
12 billion
sorry,
pounds. 12
12,
billion pounds.
12 billion pounds, okay, from a right issue. The right issue was announced as part of a trading update and was one of the largest in corporate history. The firm also announced a write-down of £5.9 billion before tax, following its exposure to the credit markets. Royal Bank of Scotland signaled that it expected to make its first annual loss in 2008 as it unveiled more write-downs on assets hit by the credit crunch. New RBS boss Stephen Hester told BBC News that making a profit would prove difficult. The scale of the market disruption and the economic downturn that is happening as a consequence means that the credit losses are rising very sharply. And said Mr. Hester, RBS also detailed plans to raise £19.7 billion as part of the government's bail plan. RBS announced that its 2008 loss totaled £24.1 billion, £34.2 billion, the largest in the UK corporate history. The bulk of the loss stemmed from a 16.2 billion pound write-down of assets, which was mainly linked to its purchase of Dutch bank ABN AMRO in 2007. It also said that it would put 325 billion pounds of toxic assets into a scheme that offers insurance for any further losses, and said the Treasury was also injecting a further 13 billion pounds into the bank. RBS also came under fire after it emerged its former boss, Sir Fred Godwin, was already drawing a pension of what? What? I'm sorry.
Yeah.
Wow,
Yeah.
$650,000, £650,000 a year.
Yeah. Yeah. And like, does anybody remember NatWest? You're so young. Y'all remember NatWest Bank? And it then became the Roy West Bank, where the Prime Minister office is now. That used to be the Roy West, all the NatWest Bank, all of that. They're no longer there. They merged and closed with Roy West and all of that. Yeah, that was like the offshore bank. Yeah. But as you can see here, anybody remember the credit crunch, the credit crisis in 2008?
I was
Not
too
at
young to even know
all.
what that was.
Not at all.
No. Like the credit crunches was like where a lot of persons lost their homes. Like there was a situation in the UK where they were manipulating the LIBOR rates too. I know y'all work in the bank, so y'all know about the LIBOR rate, where sometime it up, sometime it down. So there were two guys who were manipulating it. So persons were able to qualify for a loan, even though because how they manipulated the system, the interest rate was kind of lower. So you made like between you and your spouse or you and your co-signer, y'all made like say $50,000 a year. But y'all was able to qualify for a loan of some $300,000 with a small payment. And what happened at the end of the day, when the scheme was uncovered, a lot of persons lost their homes because now the LIBOR rate had to change and reflect its true value. And so when that rate changed, the interest rate changed, payments went up. So a lot of people lost a lot of their monies because of that scheme that those two, I think they went to jail. Those two, they won the stock market. They manipulated, had the scheme going. So a lot of persons lost their homes because they were not in the position, Angela, not in the position to make the payments. So a lot of persons lost their home. And the credit crunches, it was here too. That's why we had a lot of delinquencies because customers lost their jobs, couldn't pay their mortgages. So the credit crisis was here also. Just like how we had the credit crisis with COVID, that was in 2008, we had the credit crunch where a lot of people lost their homes because not able to pay the mortgage. And as we know, non-performing is still high in our country because of money. And as we know too, the bank is more stringent in lending, giving mortgage loans because it's like, because of the situation with COVID, nothing, even though people always say government jobs, and we talked about that, is secured, it isn't. Like the new MP and the Minister of Public Service, she said that they're not going to let anybody go right now, but they're going to put people in places where they bring something to the table. So say you have me in accounting. I know nothing of accounting, but you have me in accounting. When I fit better in maybe in working in finance or the treasury, doing a clerical job, but you have me doing accounting work, which I'm not doing it very well. So here again, like that could be, it could have led to where people get laid off, but like she said, they're not gonna do that. But in some countries they do, like in Cayman, the government cut its staff. Some government employees went home. They had to do it. So, a lot of times we feel government jobs are safe, but it could happen. And like somebody had I think Mr. Edwards, he had an article in the papers today, and it said that the government will never um, relink on making the national debt payment before the government relink on making its monthly or payment. It will tax the tax us, the taxpayers. It will tax the Bahamian people to make sure the payment is always paid, because we do not want our dollars to devalue, and we do not want to borrow any money from the monetary fund, so the IMF. So the government will actually tax Bahamians to make sure the national debt is always paid as it should be. Yeah. Yeah. Anything anybody want to add to what Miss Bain just read, Mr. Pickstock?
Based on the the findings of this, it's with credit crisis and stuff like that, learning about it, it was very devastating. But I feel as if there should have been more strict stipulations to avoid certain things. I guess because where the Bahamas was just developing itself and getting itself known, um, we we lost sight of how things could turn, and that's really happened. And borrowing and stuff like that, like as we always stated earlier, is always an issue, always a problem. And so not just fully blame on the people who give loans part in the crisis. It's more basically on us, because if we know we can't afford this loan, if we know we can't afford payments, if we know we're going, we can't afford paying this house off, why are we going to put ourselves in so much debt and so much things? Like government employees put so much debt on ourselves, and when we end up in a crisis, or we want to blame Peter, Paul, James, and all them who set up in the branch, say they cost me, or they cost me being debt in crisis. You know what I'm saying? So it's basically both partial parties at fault in this crisis, and so that's my take on it.
Yeah, but too, also remember with, say for instance, right now, COVID, a lot of persons were doing quite fine making their mortgage payments. But like we said in the class last week, if you work at the hotel and you were director of finance, and your wife was a manager of human resources, what happened with COVID? A lot of people got sent home. The hotel practically closed down. So it was no fault of yours. When you got the mortgage, you were at that level that you were fine to pay it. Your salary was fine. But remember, with COVID, everybody had to go to NIB, and you could have been the manager, the director, or two of us had to stand up on that line to get that check from National Insurance, right? And I'm sure that the check from National Insurance couldn't do nothing to help pay that mortgage. So I think that's what, at this point in time, and so that's why I say, always in life, never look down on someone else, because you was the director, but guess what? Me and you stand up on the National Insurance line to get that check. So I think COVID should have taught all of us a lesson that, and like I said last class, have more than one career. Don't just rely, because people work at a place and they be just like, this is their all in all. Then you have some people, they work, they doing that, but hey, they doing lashes on the side, they doing weave on the side, but they have that job, but on the weekend or in the night, they got their little extra thing going on. So hey, there are the more COVID, they still able to make it, because guess what? Us women could come for our weave and our lashes and our nails and all the rest. If nothing to make money, God gonna make money. So COVID teaches us to have something else other than just that. COVID taught a lot of persons to be entrepreneurs, start selling their own food instead of working for, hey, I work for Atlantis. Hey, that didn't work out. Hey, I got my own little business going on. And it works out, it works out. So, like I
So
say,
I better start saving money then, because at the end of the day, I can't do no two drugs. I didn't come home from week tired. I didn't want
you young. You young.
what? When they work me out in that treasury office, I was be ready to go home.
So imagine me, before I retired from Fidelity, I left home 6:30 in the morning, go to Fidelity job, leave Fidelity job when I used to have to teach in class, go to Biff's for 6, be there for 5 o'clock, don't leave there till probably 8:30. All day, I just getting back home from 6:30 that morning. And so you're still young.
That's powerful, because I used to come to go work for 7 and I can't do it. I can't do another job. But
Say that
I gotta
now.
get there.
No, but
I gotta
if
get
it's something
there.
that you like, there's nothing that you like as a hobby that could bring money.
The thing is, the only thing I do for a living is sing in church. That's as far as it goes. But
That's it.
to
You
me,
don't do nothing else.
I don't do nothing else but get up in the morning, go work, come back home later and go to prayer meeting on the kind of stuff. But in between, it's just sleeping. I just sleep. So that's why trying, because I be tired. Stand up my feet all day, easy things. So I be tired. So I said, let me enroll myself in some course. Let me get educated about, because I wanted one of the areas of my interest was piloting banking and finance and education. I don't fall education, I can't be no teacher, but I decided to go to banking. So with this I'm learning a lot, and so
That's good. Well, now we talk about the history of the Central Bank of the Bahamas. As we know, Central Bank has been around from 1974. I remember I gave a quiz and everybody was, I guess they all thought about independence. So everybody was 1973, and I'm like, okay, yeah. So the Central Bank has been around, and like we know, Central Bank is the lender of last resort. Central Bank created different acts. The Central Bank of the Bahamas Act 2000. And like I say, for me, that's why I don't like to read. It's more your anybody who had a chance. Okay, Mr. Sorry to pick on you. I looking for Mr. Ferguson. I see him, but I see his name here, but I don't see him. Mr. Ferguson? I don't see him. Byron Ferguson. I see his name appearing, but I don't see him on.
He's typing. He said he's still on up, and he's still on up the mic.
Oh, okay. Oh, okay. Mr. Pickstock, what is your take on Central Bank? You had a chance to look at it, read it?
yes, ma'am, I did. So I learned, as you stated before, that Central Bank of the Bahamas was a last resort for banks. They lend secretly to the bank institutions that were struggling. My surprise, I didn't know that. Um, Basically, their goals into into money laundering, regularizing the rules of banking. I deal with Central Bank a little bit, not too much. I know a bit of few of Central Bank. Basically, their overview of how the bank should operate. I know the only thing I know about Central Bank is the amount of money we can put in an ATM machine, one amount of money we can hold involved and stuff like that. But learning about this, their policies and how they hold all the banks together, and how they have compliance and stuff like that, I learned a lot that the Bank of the Bahamas is really a, a place that prints money, the place that continues to make sure that the banks stay in compliance with the rules and regulations of the government. So that's my intake of what I learned about Central Bank.
Yeah, because too, with foreign exchange, if people had their way, they'd send all kind of money out of the country. And as we know, before you could only get a certain amount of money when you travel, and now they changed it where people can, the banks, you can get $10,000. You know, it's no longer that way. You know, so central bank has totally evolved, and like I say, they have the sand dollar going, which I think is a lot of companies are actually using it, the sand dollar. And like I say, they're actually doing a lot of stuff. And I think the Basel 3 should soon be online. They've been trying to do that from I know it. And around the world, I think they've been trying with this Basel 3, because it's Basel 1 and Basel 2 now, but all of that is to regulate. And like monthly reports with the central bank, there are monthly reports that all banks have to do. For central bank, you have to do those reports monthly, and those reports have to balance, because if they don't balance, you're going to keep getting errors and errors, and you cannot upload. And central bank give you a certain date to upload certain forms, and if it's not done, the bank could be fined. And then even too, if you upload a form and you have errors in it, and when they go and they do a multi-check on it, you're getting fined. The central bank will fine you, and as long as that error keep running, you will get fined every day for that error. Central bank would fine you. Yeah, so central bank
The
makes
cen-
money too. Mhm.
yeah, the central bank also, I don't know if you know, also collect shipment from
Yeah.
banks.
Mhm.
Also that they
A big
verify and
vault.
counterfeit. We are fined for counterfeit as well. We are fined. If anything is out of tax before they even the
Yeah.
amount of the buy, so then they send it straight back to us.
Yeah.
And so my question is, right? Besides, I know that we are on par with the US dollar, and I see that, and I read that they safeguard that. They safeguard being on
Yeah,
par with
they
the
have to make
US
sure they
dollar.
have enough like foreign currency on who on whole. They have to make sure that we also have a good foreign currency reserve as well. They have to make sure that. That's why they require banks too to have a certain percentage of liquidity. And when you do those central bank report, you have to
But in
show
the
that.
latter,
So they have a liquidity report that you have to do every day, every day. Mhm.
but in the latter part of the 2000s, people were saying that we were not on par with the US dollar. Like we was 96.
But if you go to change anything, what is it? When you go to change your money, or you go to say I want US, you buy in
You
it.
mean in the little kiosk in the States?
Mhm.
It isn't
No, but I
dollars a
mean,
dollar. It's
if
like
right,
96 cents.
but if I go to the ATM machine and use my $1 card to get my money, I get the same amount of money that I asked for.
So over here, it's still the same then.
Yeah.
Okay.
Um, at First Caribbean, when
Hmm.
you posting a USD to a BSD account is a charge.
Right. Yeah, because you have banks who have USD and BSD account. Okay. Yeah, but with the central bank, like I say, the central bank is the one who regulates all financial institution, and people won't believe it, but even all these MoneyGram, Western Union, all of them regulated by the central bank. You know, there are reports that they have to send into the central bank, just like every other financial institution. So every day, a report has to go to the central bank from all financial institution every day. Their asset, their liability is showing everything that happened, their reserve. Like I said, banks have to have a certain reserve with the central bank also. A certain amount of a percentage of their deposit has to show that they have that percentage of their deposit when they send that report to the central bank. So it's a whole lot of things that the central bank actually really manage that a lot of us don't even know. I know because working in accounting, and even like when I work at Fidelity, I actually dealt with Cayman Central Bank, their monetary reserve, Cayman Monetary Central Bank. I work for them. So same thing, there were certain reports that I had to do for Cayman Central Bank. I had to do that. And it had to balance. I remember there was one report I had for Cayman Central Bank. I was like, that report had at least 100 and something columns. And at the end of that column, I had to come to zero. It was really rough. Yeah, but central bank has people who actually review different areas, different reports. Like some persons will take the assets, some take the liability. It's a whole lot. Even reporting on mortgage loans, the largest loans you have at the bank, the largest arrears you have at the bank. These are all the things like 20 largest deposit at the bank, 20 largest loan at the bank, 20 largest arrears at the bank. All of these things you have to communicate to central bank, and that's the reason how they compile when they talk about non-performing loans and the personal loans and the mortgage loans and how the percentage of it. These are reports that all banks have to compile to go to central bank. So central bank working there, I say it's a lot of work. Yeah, central bank has to do a lot of work. Whether people look at it and admire it, they do a lot at central bank to really keep us informed. They do.
So do lending institution as well, like Greenleaf and Sunshine, do they go on the central bank as well?
They should, they should. Like I say, if a MoneyGram and a Western Union and all of those having to report. But like I say, and that's the reason why the credit bureau is coming on stream. So they could rein all of these little places in line, because like I said, we talk about it, Greenleaf, the guy tell me Greenleaf interest rate is 21. What do you mean 21%? Somebody come to you all and get a loan for 21%? He said, yes. 21%. Then you have Auto H&L loans there too. Then you have Easy Pay, 15, 20. They tell me 20,000 now. So it's like, but the central bank has to be monitoring them. I don't think they just so that because they get a business license, and that license comes from central bank is in control of. They, like I say, in the banks too, they have to take out a deposit insurance. Before, years ago, after we had the Gulf Union Bank, none of y'all, probably y'all too young to remember Gulf Union Bank. Gulf Union Bank took so many people money. They used to be right on the corner where Scotia Bank, where British Colonial Hotel is, and where Scotia Bank used to be right there. I don't know if they're still there, where BAF is, where Green Paris or the Pirate Place is. Trust me. And that's what they say, reputational risk is something that can destroy a business, because it just takes one person to say, hey, you hear Gulf Union Bank closing? Well, gee, one person said that, and it was true. All those persons line up at Gulf Union. So many people lost their money. Gulf Union Bank closed down, and that's how come the deposit insurance came into play. So now, and a lot of people don't know this, but you go in any banks and you'll see that hanging the deposit insurance. And if you have $1 million in a bank, you know how much you will get, how much that deposit insurance has you insured for? 50,000. I don't know if it's gone up, but the last time I knew it was 50,000. So that's why you see a lot of people put their money in different places, because wherever you have the money, it's only insured for 50,000. Like I said, I don't know if it's gone up, but I know before that's all it was. Deposits are insured for 50,000, and that's how come the deposit insurance came into play, because of Gulf Union Bank closing down with all the people money. So now they have the deposit insurance, which central bank also is involved in. into play now. Yeah. Any questions? Any concerns? Bank of the Bahamas. Bank of the Bahamas, it's been around. And like Mr. Pickstock, was it you who said that you didn't realize that all these different key milestones in Bank of the Bahamas, 1970, 1983, 1988, it's like just about every year they did something happened. Anybody else had a chance to look at Bank of the Bahamas? To see how their asset grown, even though the situation that it's in now, Bank of the Bahamas was really just like how Freeport used to be, the creme de la creme. That was Bank of the Bahamas. And I think whether we believe it or not, what do you think caused Bank of the Bahamas to be the way it is today? Why?
The government.
Right.
Government,
Well,
politicians.
yeah, that.
Politics.
My me always tell me a lot of
Political
kids that
situation.
man all kind of money and you pay it back. That's why he's always telling me.
Yeah, but you remember now, it was always in the papers how many politicians owe, and it's just like until we move away from, because I'm in government, I can go and borrow and be this is that's why the Bank of the Bahamas need to not be under the wings of the government at all. Because if you go there now, look at most of the delinquent loans and the big loans, it is persons who used to be former government persons, MPs, $32 million. How could you lend $32 million to one person? How? And then what is the collateral? What is the collateral is not even sufficient to cover that $32 million that you lend to someone. How could you lend to two persons with friends? You lend the money to us. The collateral that we put up is not even barely enough to cover the loan that we got. And that's what really killed Bank of the Bahamas. Put it in the situation it in and caused the delinquency to be so high because of government and war. Because like even when Bank of the Bahamas, they received the Euro Money Award for excellence, they got that. Like I say, Bank of the Bahamas was recognized, and then they hired persons who really did not have the experience to run the bank. And that's the reason why too. And then here again, board members who are, it's always people who you know. And I think in any situation, being on the board, you have to have some insight on banking, some insight on how finance, like assets, liabilities, non-accruals, non-performing, stuff like that. And a lot of people just on the board just say, oh, that's my brother, that's my sister, that's somebody I know. They're on the board, you know. And like I say again, that's what killed Bank of the Bahamas. Okay. Anybody want to volunteer to read Bank of the Bahamas? We're just gonna go through it. I'm not gonna go through Royal Bank. I need y'all to look at that on your own. And Banker Development Bank. Because like I say, and when you come, chapter 2 is very, very, very short. So I need y'all to finish looking at chapter 1, but I want us to go over Bank of the Bahamas. Can somebody volunteer? Mona, you want to volunteer for me?
I know you said call my name, but anyway. Okay, so Bank of the Bahamas. When Bank of the Bahamas received the Euro Money Award for Excellence this year for the 4th time and was named the best bank in the country by the Banker, part of the Financial Times Group, for the 3rd time during the same fiscal
Yeah.
fiscal
Mhm.
year. It was a historic milestone in the nation and for the young bank. No other Bahamian bank had ever come close to achieving such international recognition. Yet Managing Director Paul McWaney hesitated to public,
Publicize.
publicize the two international recognition. Sorry. Yet Managing Director Paul McWaney hesitated to public, publicize
Publicize.
publicize the two awards, believing the news should be shared with the shareholders and stakeholders, as opposed to making it a reason for boasting when so many in the nation are still struggling. The bank, he believes, should continue to do what it has done to grow from infancy 24 years ago to where it is now, rather than basking in recognition. Yet the history is nothing short of noteworthy. Since its creation throughout the acquisition of an established Canadian bank in 1988, Bank of the Bahamas has grown from 90 million in assets to nearly 861 million as of June 30th, 2012. From three
Do
locations
y'all
to
know? Do y'all know which Bank of the Bahamas took over? Why they
Bank of
say
Montreal.
Canadian Bank? Yeah,
Bank of Montreal Limited.
yeah. Sorry, Mona.
from 3 locations to 13, from serving 2 islands to present on 7, from providing the most basic of retail banking services to the most comprehensive of financial products. In just over a decade, shareholder equity has mushroomed from 19 million in 2000 to 117 million by 2012. Bank of the Bahamas Limited record of first, sorry, let me get off glasses. Bank of the Bahamas Limited record
Records.
record of first highlighted throughout this report includes first to provide trust services for Bahamians, first to offer full, comprehensive online banking, complete with check imaging, first to comply with Check 21 procedures using electronic. What is Check 21 procedure?
First to
Crystal?
comply with Check 21 procedures using electronic imaging to clear U.S. check. Well, I guess it's something, I don't know what Check 21 is, but they're saying it's an electronic procedures we're using to clear U.S. checks. Remember now, most checks being deposited in the banks before it took like how much weeks to clear when you deposit a U.S. check. And remember too now, Bank of the Bahamas had a branch in the U.S. Yes,
Correct.
yeah, they had a branch in the U.S. So I think it made it easier for them doing the electronic banking, clearing of the U.S. checks because they already had a branch in the U.S.
Okay. All right. Check 21 procedures using electronic image to clear US dollar deposits in a timely fashion. First to offer Visa prepaid and gift cards. First to host a major mortgage fair, attracting thousands, and first to launch the unique Medline Visa card for medical services, with negotiated rates enabling cardholders to benefit from reduced cost medical care at top facilities in the Bahamas and South Florida. First and only bank to win Euromoney's Best Bank Award 4 times and the Bankers Barkin Award for Excellence 3 times, 7 times the country's best bank by 2 major international reviewers.
Do any of you ever had Bank of the Bahamas prepaid Visa? Bank of the Bahamas prepaid Visa, like I can say, when my children was off to college, that was the only thing that helped me. I used to have to go there, put money on that account. And up to today, do they have any kind of credit card?
I I bank with Bank of the Bahamas.
Mhm.
I bank with First Caribbean now, but when I bank with Bank of the Bahamas, they only had they still have the prepaid visa.
Right.
They don't have no thing. They still have the prepaid visa.
They don't have no credit card.
They
They
don't
only have the
know no,
prepaid visa and the debit card.
they don't know debit card. They only have prepaid visa and ATM cards.
Oh, okay. They just have the ATM cards, boy, because you could pass Bank of the Bahamas, any one of them, any day, and that line is be so long. Yeah, yeah, yeah. That's something they never got a credit card. That was amazing to me. All they have is a prepaid visa, and that's all you could use. Yeah,
That's
and
why I
we
was
could
shocked
go
when I
down.
read.
Mhm.
That's when I shocked when I read the Bank of the Bahamas had all these milestones and was the
Yep.
first off all these kind of things. Because when I went to Bank of the Bahamas, I called Bank of the Bahamas the worst bank in the country because it's not up to standard. And I really reading all this, I was actually shocked that Bank of the Bahamas had anything
Yeah, yeah,
accomplishments.
they did. But like I say, you have to remember too, when politics get involved in anything, no matter where, look at BPL. BPL, look at water and sewage. Every time you listen, you hear them say, um, debt, debt. The people ain't paying the bill. I remember before I used to when I pay my water bill, I always used to write a check and pay my water bill and I go there and pay it. And when I went there last day, I think to go pay the bill, they say, oh, Miss, well, like sometimes the bill was so high and I'd leave 2 or 3 post-dated checks. And the lady said, oh, Miss Smith, we ain't taking no more checks. I say, why? She said, that's nothing to do with you, but those checks, you should just rubber back to us so much. Like people just continue to write bad checks. And same thing with BPL. It's like people just continue to write bad checks and then a lot of people not paying the water bills. So here again, and why is this? Because government is involved. We have a lot of persons who are MPs, persons who are on boards, you can't go turn off their water because of what? You go turn their water off, they call Mrs. So-and-so, you gotta go back and turn the water on. And so I say, like with anything, Bank of the Bahamas is one of them that this happened to because of politics. No matter who in power, it's always related to politics. Banks should not, companies should not be owned by government. They should not, because government interferes no matter what. They say they don't, they do. Government interferes. All right, Mona. Key milestone. Mona's gone.
Do you want me
Fixed
to read
up.
it?
Yes. Yes, please. Thank you.
Sorry, someone keep
Email.
calling me.
Okay, Mona can continue, and then
Okay.
you probably can pick up.
Okay.
She's gone again. You continue, Miss Roll. Yeah.
Key milestones, 1970. The bank was incorporated in the Commonwealth of Bahamas on April 17th as Bank of Montreal, Bahamas and Caribbean Limited. Its name was changed in 1983. Its name was changed to Bank of Montreal, Bahamas Limited. 1988, the government of the Bahamas created a joint venture with Euro-Canadian Bank Limited, purchasing 51% of the shares. In 1990, the government purchased all of the shares held by the Euro-Canadian Bank Limited and issued an additional 7 million shares, bringing the total number of shares issued to 10 million. In 1994, the government sold 20% of its shareholding, or 2 million shares, to the Bahamian public. 1995, the government offered a further 3 million shares of the bank to the Bahamian public. Both offerings were sustainably oversubscribed. In 2000, the bank launched a wholly owned subsidiary, Bank of the Bahamas Trust Limited, becoming the first financial services center to offer trust services for Bahamians. In 2002, the trading name of Bank of the Bahamas International was introduced to reflect the expanding direction of the institution. In 2003, the bank acquired the assets of Workers Bank Limited, increasing its branches in New Providence to 4. The bank also acquired Citibank in Nassau, Bahamas, mortgage portfolio of 22,459,682 at a cost of $20,995,859. The closing of the contract, which include full payment to the seller, occurred on July 1, 2003. The bank continued to experience extraordinary success as it was able to announce an oversubscribed rights offering of 25 million. The bank also hosted an incredible Dream Mortgage Fair, the first of its kind in the nation. The fair was a success, resulting in a doubling of the bank's loan portfolio. A subsequent 15 million private placement preference share offering was held. Authorized capital of the bank was at 150 million shares of a $1 per value. The bank embarked on a multi-million technology investment to overhaul the back end of the data and storage, and enabled Bank of the Bahamas to provide the best possible business solutions with ongoing analysis. In 2007, Bank of the Bahamas became the first Bahamian bank with a financial service center in Florida, where Bahamians who do business there every day are able to do so with greater efficiency and ease. The same year, closer to home, BOB acquired the mortgage portfolio of Citibank as it shared its domestic book of business. In 2008 to 2011, BOB grew its private banking and trust services division, assisting clients with personalized banking to free up their most valuable asset, time. In 2009, a 20 million preference share offering further increased capital to support expansion. In 2012, work was completed on the new Carmichael Road branch, which was opened in December. In 2013, the bank was able to bolster to its capital to 22.89% in compliance with the central bank and Basel III requirements. BOB also became the first bank in the country to offer non-envelope ATM transactions.
Yeah. BOB, like I say, politics cause it to be, but I think it's rebounding now. But yes, BOB has done well. Yeah. And it's just hoping that the new person's on board now, because there are persons who used to work at Commonwealth Bank. So hopefully, they carry some of their tactics there, and they change a lot of persons who were there. So the person's leading now, hopefully, and the chair and the board, it'll make a bigger difference in BOB. Like I say, I'm not gonna go over Royal Banking. I need you to finish reading. You see how much time it takes for us, because we're reading, to look at Royal Bank and Bahamas Development Bank and Commonwealth. And I really appreciate if y'all would read chapter 2, so we can move on, because we need to finish chapter 2 next. That needs to be finished, and because I want to start bank and the economy, which deals with what is money. Yeah, so I really appreciate it. Chapter 2 is very, very small, so even if you don't get a chance to go over chapter 1 right now, because like I say, chapter 1 is just dealing with the history of the banks, and which some of y'all didn't know. So that was one thing I said, let me put in, because we always talk about the banks away. And so I said, let me put in the banks in the Bahamas. Yeah. So you can continue reading that chapter 1, but I would appreciate it if you pay attention to chapter 2, so we can finish that. And I'm going to send, I have the course outline, I was supposed to send it and I forgot. So I'm going to send the course outline to everyone, so you'll know where we're at when midterm, what chapters are for midterm. And I'll always tell you after next week, I show you, we'll see a quiz and I will give you an assignment. Okay? Any questions, any concerns? Hello?
No,
Yes,
ma'am.
hi.
Hi.
So what would, as we go, what we should pay attention to? I know you said something, but
Then dates. Make sure pay
Okay.
attention to dates.
Okay.
Dates, yeah, because like, unlike different acts,
Okay. Okay.
yeah, dates and different acts. But like I say, I really would appreciate if you all read chapter 2, so we can really talk about the introduction of banking, a unique business, talk about the types of banks, central bank, the mergers, technology, commercial banks, investment banks, insurance, retail banks, mutual saving banks, credit union, trust companies, pension funds, currency exchange, brokerage funds, competition, credit creation. So we can just quickly go through that. So, and then I probably give you an assignment. Yeah. Okay. And then probably after that on chapter 3, we'll have a quiz on chapter 3. Okay. But I will not blindside you. I will let you know. And like I say, chapter 2 is quite short. Chapter 3 is not lengthy either. Yeah. Chapter 4, none of those are lengthy. I think chapter 5 is the lengthiest chapter. Yeah, because it talks about the different products and services offered by the banks and why people save and yeah, so the advantages and disadvantage of sole traders and companies and public and private companies. So I think chapter 5 and chapter 6, yeah. So like I say, try to ensure that you read chapter 2 because like I say, I don't want to be doing the reading. It takes a whole lot of time, but if we prepare to read before, we can just ask any questions and things, like I say, concerns, we can just go over them. So chapter 2, please try to read chapter 2 for me, please. Everybody have a book?
Yes.
Yes,
Okay.
ma'am.
So try to read chapter 2 for me, please. Yeah, and like I say, I am gonna try my best to send you all the course outline. I did it from that night, but I keep forgetting to send it. Yeah, so I'll send the course outline to you. It'll tell you the grade scheme, which I told you all last week, but it'll tell you the grade scheme, it'll tell you quiz points. And like I say, it'll tell you when it's the midterm and the chapters on the midterm. It won't detail when it's a quiz. I'll actually tell you if I'm giving you a quiz and then I'll give you assignment to do. Okay?
Okay.
Okay.
Alrighty.
That's
Good night. But please,
Good night.
Good night.
appreciate it if y'all will read next week for me, please. Thank you.
Yes.
Okay. Good night.
Good night.
No.
Good night.
Good night.